Hey guys, Boris. Welcome to the crosses section for March 27th to March 31 of 2017. And the crosses section this week is really going to be sort of yen crosses, COM dollar themes, and a little bit of cable, because those are the predominant themes I think that are going to be very much in play as we go forward. On the yen side, the weakest trade last week was Aussie yen to the downside. And to me, this is a sort of an interesting trade as we go forward, because if we do have a grip of risk aversion, in other words, if equities start to really fall out of bed, if that little collapse of 1.5% that we saw last week is just a precursor to a bigger sell-off in equities, nothing reacts more to that than Aussie yen. And of course, that's support at 84, very, very vulnerable to the downside. On the other hand, if we have a bounce in equities, that's probably going to be the single biggest beneficiary of that, simply because Aussie is oversold, and of course, dollar yen could pop. And so depending on how you trade the equity market, this is going to be a very interesting proxy for that trade in the currency market. Now, Euro Aussie, on the other hand, is really going to be the continuation of the whole COM dollar versus Euro trade. And that's going to be a very interesting trade again, because Aussie certainly was very weak over the week last week and came in 3 days in a row. Continuation to the downside, with Euro looking quite good, could provide us a move all the way down to the 140 level. It's not really a trade on risk aversion as much as a trade on commodity prices going forward, and that I think could be a very interesting trade. Euro definitely gets a little bit of support from economic data this week, but I think the main issue with Euro is that it simply stays stationary while everything else around it could fall. That's why the Euro Aussie trade could be a potential trade to the upside as we go further. And pound Swiss is really kind of a substitute for pound dollar, and it's really a trade here on cable short squeeze. Do we get the exact opposite reaction that the market thinks, which is, they call Brexit and pound actually rallies on relief rather than falls on disappointment, since the market already knew that it was coming, and any kind of a move in cable to the upside certainly could squeeze us to the upside. On the other hand, a risk aversion trade, and this is interesting, I think that this is why equity markets are going to be so absolutely key this week to determining which way you want to trade. We start falling out of bed on the equity side. If S&P starts to go down 1-2% in a day, which is these days a massive move to the downside, that really creates a very strong downward move in dollar Swiss. Swissy is the primary beneficiary of risk aversion flows. And cable is going to be wobbly because, remember, ultimately UK is basically a stock market proxy. The UK sits in the middle of the rest of the world in handling all of the equity business from Asia through Europe to North America. And therefore, any kind of a collapse in equity prices definitely hurts the cable more than I think any other currency. So a decline in equity prices, both of those trades, I think, Aussie yen and pound Swiss, could be quite vulnerable to the downside, aside from Brexit, which could just essentially be a non-event at this point, as everything is priced in. Let's take a look at the charts here and just see how everything is looking on a chart basis. So here's Aussie yen. And as we said, one of the worst performing pairs last week. Did find a little bit of a bid here at this 84 level, right in front of the 84 level. And really becomes a proxy on the equity business. This 84.50 seems to be holding, but it's a distributive triple top here, and a break below the 84.50 certainly opens up the run. The test of 84 here, a crush through there, really has nothing here until 82. So it's really going to become one of the weaker yen trades if we get a massive decline in risk aversion business. Euro Aussie continue to trade well, but we're coming up against a pretty stiff resistance at this 41.50, 42 level. So truly, you would need a pretty serious risk-off trade here in the Australian dollar, or a much stronger weakening in the commodity complex for this thing to push through above the 42.50 level. That's why, in some ways, if you sort of if you want to hedge the position, an interesting trade could be a short Aussie yen, short Euro Aussie trade, on the assumption that if risk aversion doesn't come, then the Aussie gets a little bit of a reprieve and you get a relative bid here, Euro Aussie coming back down, perhaps down to the 140 level, because Aussie will jump on any kind of a positive equity move, whereas Euro is likely to stay stationary. It's not a perfect hedge by any means, a stretch of imagination, but certainly I'm a lot more dubious of trying to get long here against this very stiff resistance right now. If we clear through that, then yes, you have a lot more upside as we go. But for now, I certainly wouldn't want to be long here. A tactical short as a kind of a hedge against your short Aussie position somewhere else could be an interesting trade, just as a hedge. And last but not least, here's the cable, which is really sort of a trade on two things. Either a short squeeze in cable, which will take us higher down to up to the 26 level, but more interestingly, a risk aversion trade, which definitely will take us down to the 122s, because the Swissy is going to benefit, and cable is just not going to rally on any kind of a decline in equity prices, regardless of whatever happens on the Brexit front. In many ways, I think the Brexit story is sort of an old story. If you look at it on a longer term basis, pound Swiss is much more of a sell than it is a high. A failure of lower highs continuously all the way through here, including the one last Friday here. So it points more to the downside rather than to the upside. The only reason to want to get long this thing is just simply if you want to bet on a short squeeze into the Brexit announcement, which could possibly happen. But generally, it feels like cable maybe has squeezed most of its juice over the last week, and in some ways has lost a lot of its luster. So a trade down back to the 22. Very much possible as we go forward. Wish you guys the best of luck, best of trading. Boris, over and out.